Hey everybody. What is there to say today? You look at the price movements that we're seeing in the energy markets right now. We're up and down $10 on a whim based on geopolitical unrest right now in one of the, well, probably the region of this planet that's the most unstable historically. And this market, if you don't have to, it's probably not a market to trade right now. When we had the rally off of Egypt, we came down just as fast as we went back up, and the same could hold true on this rally. Again, most of the concern right now, we've got Libya, the unrest over there. Money is flowing into the energy markets right now. It's flowing out of other markets that are growth-based or markets that are deemed as risky assets. So equities are taking the plunge. Markets like copper, which are heavily invested in when we feel that there's strong growth potential, that took a very big hit today. But as far as Libya is concerned, on their own, they only produce about 1.6 million barrels a day. And I say only, but that's really not enough to disrupt the global supply. Really, the fear is that this unrest is going to spread to other African and Middle Eastern nations. And if that happens, we're going to continue to see this market go up. Now you can see this is the continuous crude oil chart. This is plotting the March contract right now, but that is going off the board today. So the April contract will be front month tomorrow, and that is currently trading a few dollars higher, up around that 94.80, 94.60 area. I would suspect that this market may settle down a little bit, but we should see buying coming back in at current levels in the March. So somewhere in this 92 to 92.50 area, I would expect the trade to start coming in here and buying the April contract at those prices if we see that. But just ask yourself simply, is a market that's doing moves like this, is that a market I want to be involved in right now? I don't. I wouldn't trade it with your account. So if we do see this thing set back, here's a couple potential retracement targets. We just made some lows last week. This is a heck of a move here. 50% retracement of this move from last week's low to the high today is going to come in right around 92.80, and 62% is going to be right around 91.45. And somewhere in the middle here is going to be that sweet spot, right around $92 a barrel, which is going to come in right around these highs. So if you do want to be involved in the market, maybe look for a little bit of a setback. You probably have to look at the long side based on everything that's going on right now. Otherwise, as this market goes up, if we continue to see some of these sharp moves higher, getting some cheap puts in this market may not be a bad idea either. Again, when you look at the move that we had off of the Egypt unrest and how fast we came down and actually made new lows, this market's not going to look very good if we see this thing almost touch 100 and all of a sudden we're making lows below last week's lows. So again, trade it at your own risk in this market. Here's the dollar index, and you can almost see we've got a potential head and shoulder top forming on this dollar. This 78.40 area, 40 to 45, has been some good resistance here. We pushed through it. We were making lows in the same area on the days we were making highs. It served as resistance late last week and also today. If this dollar for some reason ends up taking out last week's lows, you've got a real nice looking head and shoulder top that projects back down near these lows and maybe a little bit further below them, down near 76. So it's hard to really guess where money is going to be going in and out of all these markets with what's going on right now. But if the dollar index does start breaking and validates a head and shoulder top, we may see some more of this money that's just left the market come back in here too. So that's all I got.